This is your Wall Street wake-up call as world leaders meet in China for the G20 Summit. Saudi Arabia and Russia agreeing to cooperate to stabilize the oil market. For more, I'm joined now by Michael Ingram, a market analyst with BGC Partners in London. So Michael, let's be clear, this is not a production freeze, which is something that's been, tossed around for about 6 months. It's merely an agreement to cooperate. I mean, do we know exactly what that means?
No, we don't know what it means, Scott, and you can see the market's confusion. Yesterday morning, we did see this flurry of excitement that this might be a concrete prelude to a production freeze to be announced in Algiers later on this month, and we saw WTI and Brent put on about $2, but then they say, well, hang on, where's the beef? Where are the details? Well, there was none to be had, and so most of those gains have now been given up. We're probably about 50 cents up on where we were before the announcement came out. If you look at the numbers out there, I think the market is right to be skeptical. OPEC in August pumped a record amount of crude, 33.7 million barrels a day. Russia is pumping at a post-Soviet high, something like 11.5, 11.6 million barrels a day. And if there is some kind of agreement, it's probably going to be in place for a few months. Certainly Energy Minister Novak of Russia was talking about an agreement maybe of 3 to 6 months. You've got countries such as Libya and Nigeria, which has suffered supply disruptions.
Right.
They're going to want an exception to that. That could put another 1.3 million barrels into the market. So, more questions than answers at this point, Scott, I'm afraid. And as I said, markets rightly somewhat confused as to what is actually going on.
So do you think this is just a move to put some upward pressure on oil prices? I mean, we've seen comments like this, before, and just as a move, as a way to get oil higher.
Yes, Scott. I mean, we have been here many times before, as you quite rightly point out. I think this is one of these what central bankers would call open-mouth operations. It's tried to keep traders from being aggressively short of the black stuff. But, of course, in the absence of better supply-demand fundamentals, I think that any rally is likely to be somewhat elusive.
Well, and you still have the issue of Iran, which wants to produce more oil now that those sanctions have been lifted. I mean, this is one of the reasons why a production freeze wasn't agreed upon at that OPEC meeting back in April. So would you agree that a lot of the themes in play then are still in the picture now?
To an extent, Scott. I mean, if you look at the production levels in Iran now, they are pretty much at pre-sanction levels at approximately 4 million barrels today, a day. Maybe we've got a little bit further to go, but that's the level they seem to want to be pegging at for now. Although I would point out over the longer term, they want to see production at much higher levels. Also, we need to look at countries such as Iraq, and this has been ignored to a large extent. They have longer term ambitions to get supply up to something like 10 million barrels a day by the end of the decade. They're currently at 4.5. So, there's a lot more production which might come out of OPEC. And of course, something we haven't mentioned as well is that US production also seems to have stabilized at about 8.5 million barrels a day. Having seeded about 1 million barrels a day over the last 18 months, that's no longer also being a support for the oil price.
All right, Michael, we'll be watching. We've got WTI up about 1% this morning. All right, Michael Ingram, a market analyst with BGC Partners in London. Michael, thank you.
My pleasure as always, Scott.
I'm Scott Gamm, and you're watching The Street.